Perkumpulan Praktisi dan Profesi Konsultan Pajak Indonesia atau P3KPI adalah wadah bagi seluruh warga negara Indonesia yang bergerak di bidang jasa perpajakan dari berbagai disiplin ilmu. Sesuai amanat PMK 111/2014 bahwa konsultan pajak Indonesia harus bisa berperan untuk membina dan mengedukasi dan menjadi jembatan antara kepentingan wajib pajak dan kantor pajak atau Direktorat Jenderal Pajak. Moto daripada P3KPI adalah bersinergi bersama-sama, berbagi pengetahuan, membuka wawasan seluas-luasnya bagi konsultan pajak dan merupakan solusi bagi konsultan pajak yang membantu mereka untuk mencari solusi dalam masalah. P3KPI merupakan perkumpulan yang berkomitmen tinggi di dalam memajukan konsultan pajak Indonesia, ikut berperan di dalam formulasi dan regulasi kebijakan pemerintah melalui basis riset dan kajian, juga membina dan membimbing anggotanya supaya mampu menjadi jembatan di antara dua kepentingan wajib pajak dan kepentingan otoritas, dalam hal ini Direktorat Jenderal Pajak.
Mudah-mudahan dengan forum seperti ini terus kita perkaya, kita perbanyak, sehingga pajak yang menjadi tulang punggung penerimaan negara menjadi urat nadi pembangunan betul-betul semakin kuat.
Nanti di dalamnya itu akan diatur mengenai P2PK sebagai unit pembina dari konsultan pajak ini.
Yaitu tentang tax amnesty. Nah,
sepinter-pinternya Anda orang tidak tertarik, tapi sebaliknya
nanti mungkin akan keluar ya
nggak ada kerjaan. dia lebih santai. Tapi kalau setiap kali slide ke kiri lewatin dia,
untuk penghematan waktu, kemudian ramah lingkungan karena tidak menggunakan kertas.
Ini dijelaskan adanya beberapa fase untuk proses integrasi itu sampai dengan
Itu tidak ada pergolakan di keluarga.
Kita pahami semua. Mungkin coba saya ingin merefresh sebentar ya, memang
adalah berbicara untuk pajak, yang kedua berbicara subjek pajak, yang ketiga
Dalam rangka meningkatkan tadi kemudahan berusaha supaya investasinya meningkat.
PPN bisa dikenakan oleh negara di mana konsumen berada.
peraturan baru yang ada ya. Jangan sampai kita malah kitanya nggak tahu ya.
Ya, sekarang dengan pilar 2 nggak bisa lagi dong. Akhirnya kita nggak akan saingan lagi dengan Singapura misalnya.
tapi analisa dulu ya ini analisis SP2DK ini.
Disampaikan kepada otoritas ya, BJP terutama, sehingga menjadi masukan dalam
itu menggunakan metodenya di mana? Di SE 65 tahun 2013.
Jadi SP2DK itu diawali dengan ini tahapannya ya.
Saya Justinus Prastowo mengucapkan selamat ulang tahun yang pertama kepada P3KPI. Dengan ulang tahun yang pertama ini, semoga P3KPI semakin solid, semakin kompak, dan semakin gigih sebagai organisasi profesi konsultan pajak dan praktisi. Semoga semakin mendapatkan anggota yang lebih banyak, dapat memberikan warna tersendiri bagi dunia perpajakan Indonesia, dan yang jelas kontribusi untuk Indonesia yang lebih baik. Pajak kuat, Indonesia maju. Saya melihat P3KPI punya warna tersendiri, dan saya percaya juga punya tempat tersendiri di hati publik, di hati para stakeholders perpajakan. Maka di ulang tahun yang pertama ini, saya ingin memotivasi, ingin menyemangati sekaligus ingin mendorong agar P3KPI semakin fokus kepada panggilan profesi, tidak sekedar konsultan pajak yang berrelasi dengan para klien atau wajib pajak, tapi juga praktisi yang aktif, proaktif dalam upaya
sukses di peraturan perpajakan dan juga menjaring aspirasi masyarakat agar kebijakan perpajakan Indonesia semakin hari semakin baik. Itu yang kita harapkan.
Sasaran daripada P3KPI itu adalah memberikan edukasi, memberikan penyuluhan kepada seluruh masyarakat agar bersama-sama kita bahu-membahu bisa menjadi konsultan pajak Indonesia yang mumpuni dan juga membantu pemulihan ekonomi nasional.
Sebagai asosiasi yang baru, tentu kita banyak berharap moga-moga ke depan akan menjadi lebih baik lagi. Apalagi sekarang dengan adanya telah disahkannya undang-undang harmonisasi perpajakan yang pasti itu merupakan pekerjaan rumah kita untuk harus kita laksanakan.
Selamat ulang tahun yang pertama untuk P3KPI. Semoga IKPI akan muncul konsultan pajak yang profesional yang benar-benar bisa bermanfaat untuk kepentingan bangsa dan negara.
Semoga ke depan P3KPI bersinergi bersama dengan seluruh instrumen daripada pemerintah, juga bersama-sama dengan para anggota konsultan yang handal dan terpercaya menjadi satu wadah yang dapat dipercaya bagi dunia usaha, juga bagi pemerintah, dan membantu memberi masukan regulasi-regulasi yang berlaku, lebih mendukung kepada iklim pengusaha dan juga mendukung pemulihan ekonomi nasional pasca pandemi ini.
Berharap bahwa P3KPI semakin sukses ke depannya dan berjaya terus dan berlangsung terus, jadi ongoing, tidak hanya bertahun-tahun, tapi mudah-mudahan bisa selamanya P3KPI ini berkembang, berdiri, dan semakin menunjang kemajuan untuk Indonesia ini. Dan moga-moga kita tetap bisa silih asih, silih asah, silih asuh, artinya saling meningkatkan, saling menyayangi, dan saling menghargai antara sesama anggota P3KPI.
Kita ini kedepannya ingin agar kita ini sebagai mitra pemerintah, khususnya DJP, kita mau mereka menghargai kita setara dengan istilahnya setara dengan pemerintah. Jadi kita harapkan dengan adanya kinerja kita yang baik, yang lebih kompak, yang bersinergi, ini kita mengharapkan bahwa pemerintah ini benar-benar menghargai kita sebagai institusi atau asosiasi yang baik, yang setara, istilahnya gitu, yang setara. Jadi itu bahwa kita memang sekarang sudah banyak sebagai tech center daripada masyarakat bisnis. Itu yang kita cari. Jadi kita memang ingin jadi asosiasi konsultan pajak yang berbeda dengan asosiasi yang lain.
Sebagai asosiasi profesi dan praktisi dan profesi ini tergabung. Yang bagaimana konsultan pajak, tapi jelas dari semua yang kita laksanakan bukan hanya untuk konsultan pajak tadi, tapi para praktisi-praktisi kita ajak dan memang berikan saran-saran. Dan ini yang paling penting dalam berikan masukan kepada Direktorat Jenderal Pajak. Selamat ulang tahun kepada P3KPI dan kepada semua anggota-anggota. Mari kita dukung, mari kita bersama-sama P3KPI memberikan partisipasi kita dalam mendukung perpajakan di Indonesia.
Pada seluruh anggota dan pengurus perkumpulan praktisi dan profesi konsultan pajak mengucapkan selamat ulang tahun. Yang pertama, semoga profesi ini dapat memberikan sumbangan dan saran kepada negara dan bangsa. Selamat ulang tahun dan semoga sukses selalu.
Selamat ulang tahun P3KPI.
Good afternoon, Excellencies, ladies and gentlemen. We cordially invite you to rename your Zoom account with clear name and NRA, especially for P3KPI member. The ceremony will proceed in no time. Thank you. Assalamualaikum warahmatullahi wabarakatuh. Good afternoon, greetings. Respectable the Director of Bureau Van Dijk, Mr. Makbul Lalji, Honorable Chairwoman of P3KPI, Mrs. Susi Suryani, Honorable Head of P3KPI Supervisory Board, Mr. Sakli Anggoro, Honorable Head of P3KPI Education, Literacy and Competence Field, Mrs. Dwi Ratna, Honorable Head of P3KPI Research Studies and International Relations Field, Mrs. Christine Chen, who will be our gorgeous moderator today. And of course, Honorable P3KPI administrators and members, as well as all participants who have joined us. Thank you for your presence in this event. Good afternoon, ladies and gentlemen. My name is Irene Titus. It is an honor to be your Master of Ceremony in this afternoon on Wednesday, 2nd March of 2022, in our webinar with today's topic, Data and Tools to Support Global Tax and Transfer Pricing Analysis. Excellencies, ladies and gentlemen, before we start our agenda for today, let's sing together our nationality song, Indonesia Raya. Thank you. Next, let us pray together for today's successful event. Pray start. Thank you. Today's webinar is one of P3KPI commitments to becoming strategic partner of Directorate General of Taxes of Indonesia in order to educate our practitioners and tax consultants, members of P3KPI, as well as public-wide. That's why P3KPI collaborate with many associations who also attend this afternoon virtual event. Greetings, Mr. Haryadi Sukamdani, Chairman of Indonesian Entrepreneur Association, APindo, Mr. Kiki Barki, Chairman of Indonesian Chinese Entrepreneur Association, PERPIT, Mr. Major General Sudrajat, Chairman of Indonesia-China Institution, LEAD, Ms. Christine Chen, Association of Tax Centers for Higher Education all over Indonesia at PETSI, Mr. Mardani Meming, Chairman of Indonesian Young Entrepreneurs HIPMI, Mr. Dr. Andes Paulus Totok Lusida, Chief General of Indonesian Real Estate, Mr. Iwayan Suparmin, Chairman Indonesian Chinese Society for Jakarta Area, Mr. Ali Hussein, Vice Chairman Indonesia China Business Council, ICBC, Mr. Gusandi Syamsuddin, Chairman Association of Tower and Telecommunication Infrastructure, ASPIMTEL, Mr. Adian Radiatus, Chief General Chinese Devotion Forum for Bhakti, Mr. Joko Supriyono, Chairman of Indonesian Palm Oil Association, GAPKI, Mr. Maspiono Handoyo, Chairman of Prasetya Mulia University Alumni Association, IKAPRAMA, and Mr. Chairul Brudrianto, Chairman of Faculty Economics and Business Trisakti University Alumni Association, IKAFEB Usakti. We thank you for all of your participation. Excellent ladies and gentlemen, step on the following agenda are speeches. The first is keynote speech from our Honorable Chairwoman of P3KPI, Mrs. Susi Suryani.
Thank you, Miss
Okay.
Irene, for
Yes,
the
please,
time.
time is yours. Yes.
Assalamualaikum warahmatullahi wabarakatuh. Thank you, ladies and gentlemen. Today that all of us have a good health and happy. Thanks God that God give us all of that. That's during pandemic is very precious for us. And thanks a lot for Mr. Makbulaji that today have time for us to explain in details, update more for us about transfer pricing and the international taxation. And thanks for all the team that can make it today's webinar. Digitization changes many aspects of our daily lives. Nowadays, the economic system and the way of life of our society are run by many digital functions. The extent that brought about the digital transformation poses many challenges for policymakers. Digitization is also made possible new and effective ways to support policy development and implementation. Today, digital devices can be found everywhere. Connectivity and smart technology bring about significant change that profoundly affect human relationship and business behavior. Information and communication technology has become part of the infrastructure for business and society. As evidenced by the high dependence on online communication that is efficient and widely accessible through network and services. Connected user and device continuously generate vast amount of data. Businesses and government collect this data and process it with advanced technology and provides the insight needed to change and shape the way people behave and companies operate. In a rapidly changing digital environment, the challenge for policymakers are becoming more complex. Specifically for tax matters, this means that development and implementation of tax regulation must incorporate a changing environment up to speed with a rapidly changing way of lives. Implication of digitization. Digitization has various implications in taxation, both at the national and international tax levels. As a result, the tax policy implications of digitization have been at the center of the recent global debate. Digitization and international tax rules. For several years, government, media, and community leaders around the world have expressed growing concern about tax planning by multinational corporations exploiting gaps in different tax systems. Artificially reduce tax income or shift profit to state jurisdiction with low tariff, even though little or no economic activity has been carried out. In response to these concerns, and at the request of the G20, the OECD several years ago developed an action plan or base erosion and profit shifting or BEPS. As part of its works on taxation and the digital economy, OECD is working on setting new profit allocation criteria and related rules. With businesses in all sectors becoming increasingly digital, the work of the OECD could dramatically affect current transfer pricing arrangement. Under the principle of fairness, group companies aim to set their intercompany transfer price at the same level as unrelated parties. The focus is to consider the function, asset, and the risk of the transaction parties in determining the fair price. Before the OECD initiated its action plan on BEPS, many countries were concerned that companies could apply the principle of fairness in a way that would allow them to transfer profits to tax-free or low-tax state jurisdiction based on legal ownership, contractual rights. However, when the issue was debating during the BEPS talk, the OECD concluded that the standard of fairness itself was not a problem. Instead, the problem is how they are interpreted and applied in a highly complex international setting. Asia Pacific. Asia Pacific has a substantial digital marketplace and is home to some of the world's largest technology companies. Nonetheless, IMF states that global tax reform efforts to tackle economic digitization are likely to have negligible revenue effect on the region. The technology industry in Asia. The IMF report notes that Asia has large domestic digital businesses that rival US tech giants. China itself has some of the largest e-commerce companies in the world, measured by market share and total sales. For example, Alibaba, an online marketplace in China, has a significant percentage of the global e-commerce market share. While US tech giants operate mainly globally, their Asian rivals operate primarily in the domestic market. Nonetheless, Asian firms have comparable profitability to US firms and are likely to rely on intangible assets to the same extent. Across the region, Asia and New Zealand have highly digital service economies, but they are less prominent in technology manufacturing than China, Japan, and South Korea, India, and even Indonesia. Also have fast-growing e-commerce market and are seeing the growth of several emerging local companies, while Singapore serves as a business hub for the technology sector. Implication of global tax reform. The OECD-led global tax reform are also linked to eliminating the unilateral digital services tax and lower overall revenues for countries implementing the tax. India and Malaysia have implemented a digital services tax in the Asia Pacific region, while Indonesia has imposed the tariff but has not yet implemented it. New Zealand and Vietnam are also considering the tax. Countries in the area that are home to big tech technologies such as China, Japan, and Korea have shown lower interest in taxing digital services. The shift to digitalization, especially by companies not engaged in technology, raises universal transfer pricing question that companies must be ready to answer. These questions include, number one, who owns the valuable intangible asset created due to digitization and business operation? Number two, in what ways has going digital changed existing corporate value chains and intercompany arrangement? Number three, is the company's transfer pricing position defensible? And if so, is the position adequately documented and supported? In essence, all of these questions relate to the critical question raised by PEPs about whether the growing relocation of taxable income across countries where companies operate is aligned with where value is created through digitization. As this business changes, they must re-evaluate their transfer price to identify new ways enterprise create value and ensure that transaction and pricing between companies and the allocation of taxable income generated across jurisdictions are structured to align with value creation. As companies collect more data about their customers, users, supply chains, or manufacturing processes, they must consider a new set of questions. For example, how will they use this data? If someone were to analyze the data, where would they be? Who designed the algorithm or programs to interpret and use the data? And if all of that is combined and has value, which jurisdiction should benefit? Tax authorities can claim that the value is created where the data was collected. However, the real questions are, where is the data made into a usable data set? Who or what find the images in the data and how are those images exploited to create value? In addition, certain jurisdictions can become centers of excellence in data mining and artificial intelligence training, with China and the US currently leading the way. If expertise developed in that jurisdiction is leveraged globally, should that expertise be paid for and how? Well, on this opportunity of the webinar, let's listen to an explanation from the speaker himself, Mr. Makbul Laji, the director of BVD, who will explain and review the impact of digitalization and technology in tax and transfer pricing from a global and Asia Pacific perspective. Thank you for all. Enjoy, and hopefully the webinar will be useful for us as a tax consultant, as a taxpayer, and all the stakeholders of the taxation. Thank you all. Good afternoon.
Thank you, Ibu Susi Suryani, for an enlightening speech. Okay, well, next, we invite our Honorable Head of P3 KPI Supervisory Board, Bapak Sakli Anggoro, to deliver the keynote speech today. Dear Bapak Sakli, time is yours.
Assalamualaikum warahmatullahi wabarakatuh. Selamat sore, good afternoon, salam sejahtera buat kita semua. Alhamdulillahirrahmanirrahim, kita sudah mendengar tadi opening speech dari Ibu Susi, dan juga pembicara kita hari ini mungkin Mr. Makbul Lalji, Director of Bureau of Fundik ya. Sorry, I'm speaking in bahasa. Dan juga para pengurus dan anggota P3KP yang kami banggakan. Tak lupa MC kita hari ini adalah tetap selalu rutin ini Ibu Airin Titus dan juga Alhamdulillah Ibu moderator kita Ibu Christine Chen ya. Dan juga closing speech, nanti ada closing speech kalau nggak salah Ibu Dwi Ratna lengkap sudah kalau gitu. Sudah semuanya udah, panitianya sudah lengkap semua. Alhamdulillah kali ini webinar yang dilakukan oleh P3KPI ini dilakukan pada awal bulan Maret. Nah, ini dengan topik Data and Tools to Support Global Tax and Transfer Pricing. Semoga acara ini bermanfaat dan menambah pengetahuan bagi anggota P3KPI. Mungkin tadi Ibu Susi juga sudah banyak berbicara. Jadi kita tahu bahwa kalau lihat dari temanya adalah judulnya Data and Tools, kita tahu bahwa kehidupan kita di dunia ini tidak semakin dipengaruhi oleh data. Setiap aspek kehidupan kita, mulai dari kita olahraga, kita nonton, kita berbelanja, kita ikut harian, dipengaruhi oleh peningkatan daya komputer. Ini semua kita lihat dipengaruhi oleh peningkatan daya komputasi dan peningkatan alat analisis. Karena kemajuan teknologi ini telah memberi kita kemampuan untuk dapat cepat menganalisis kekumpulan data yang sebelumnya terlalu besar atau kompleks, ditangani tanpa menggunakan superkomputer atau ratusan jam kerja. Munculnya big data mengganggu cara berpikir kita saat ini, menyebabkan kita meriksa kembali semua yang kita pikir kita ketahui. Dan dalam topik webinar kali ini tidak berbeda dengan proses bisnis lainnya. Namun kita tahu bahwa berada dalam posisi yang lebih baik untuk memanfaatkan kumpulan data yang kaya dan unik untuk memberikan wawasan bisnis maupun sudut lain, yaitu masalah perpajakan. Kumpulan data yaitu data transaksional, informasi perusahaan, badan hukum, data perbandingan, penjelasan hukum, dan sumber informasi lainnya yang berdampak pada harga antar perusahaan. Jadi implikasi kalau kita lihat dari dengan adanya big data ini yang pada global tax, kita tahu pada mungkin tadi Bu Susi sudah menyampaikan bahwa pada tanggal 8 Oktober 2021 anggota dari OECD G20 Inclusive Framework on BEPS telah menyepakati the statement of the two-pillar solution to address the tax challenge arising from the digitalization of the economy. Jadi kita tahu bahwa solusi dua pilar itu akan memastikan bahwa perusahaan multinasional akan dikenakan tarif sesuai dengan tarif pajak minimal yaitu 15% dan akan mengalokasikan kembali profit dari multinational corporation itu ke negara-negara di seluruh dunia. Jadi solusi dua pilar ini kita tahu adalah untuk bertujuan untuk memastikan pilar pertama adalah memastikan bahwa distribusi profit yang lebih adil dan distribusi hak pemajakan di antara negara yang berkenan dengan perusahaan multinasional besar yang diuntungkan dari globalisasi. Pilar kedua, menyelesaikan isu persaingan yang itu mungkin kita sudah tahu semuanya. Kemarin mungkin minggu lalu baru kita bahas semuanya, tapi mungkin tidak terlalu dibahas dengan Ibu Christine Chen mengenai pilar kedua itu pajak perusahaan minimum itu yang jumlahnya sekitar 15% yang dapat digunakan suatu negara untuk melindungi basis pajak masing-masing negara. Kita tahu bahwa DJP, kita melihat sebagai konsultan pajak, kita harus tahu bahwa DJT ini telah meningkatkan teknologi informasi atau reformasi IT dengan memperbarui dan mengembangkan penyimpanan big data untuk menjalankan sistem pengawasan kepada wajib pajak yang kita kenal dengan nama Cortex System. Sistem aplikasi DJP dalam mengolah data ini, big data ini dari berbagai sumber, mungkin kita tahu semuanya, sumbernya banyak sekali kalau dari DJP ya. Terakhir juga mungkin beberapa negara sudah mengadakan country by country report, itu sudah ada, yang lainnya sudah pasti banyak otomatis ya. Nah, kita perlu tahu bahwa dengan adanya big data yang ada di JP ini, tidak mungkin lagi sistem yang lama digunakan, perangkat lama. Makanya sudah beberapa tahun kita melakukan on progress. Kemungkinan tahun ini Cortex System itu selesai. Apabila aplikasi sudah selesai, jadi seluruh tugas KPP dilaksanakan secara digital. Nah, itu yang kita harus tahu. Walaupun sekarang sebelumnya kita sudah tahu sekarang ini sudah beberapa tugas dilakukan secara digital. Begitu juga kantor konsultan ya, pajak sebesar Biro Fandik ini dengan adanya big data sudah meningkatkan informasi teknologi dengan menggunakan business intelligence tools for transfer pricing. Mereka sudah bisa, perangkat ini dirancang untuk membantu perusahaan mengambil dan menganalisis data. Kan itu sudah canggih lah. Alat ini biasanya menampilkan dashboard visual Nah, ini yang hebatnya di sini dengan kemampuan penyaringan yang menawarkan cara mudah bagi perusahaan untuk melihat sejumlah besar data bisnis. Untuk tujuan transfer pricing, alat seperti ini menawarkan perusahaan multinasional pandangan bahwa gambaran besar dan data untuk semua negara di mana mereka melakukan bisnis. Jadi memang sudah tahu bahwa mereka melakukan bisnis, sudah tahu gambaran besar. Dengan dashboard visual ini, perusahaan dapat melihat daftar lengkap badan hukum dengan sejumlah opsi penyaringan yang berbeda untuk data slice and dice. Jadi hal ini dapat juga kita dirancang untuk memiliki kemampuan untuk menyaring data. Kita mau data apa saja, kita bisakan dari situ. Itu yang saya hebatnya dari software-nya maupun dari data yang dipunyai oleh kantor konsulen pajak yang besar, khususnya di Big Five ya. Jadi kita perlu di sini harus ditingkatkan, meningkatkan keperhatian kepada analisa, karena memang analisa ini yang selama ini kita tahu bahwa data-data yang selama ini diserahkan oleh diserahkan oleh wajib pajak mengenai TP documentation itu memang masih banyak yang sering terdapat perselisihan. Tetapi mungkin dengan adanya The Big Five ini saya juga tidak tahu persis gimana, apakah memang banyak yang ditolak atau tidak, tapi perbedaan penafsiran sebetulnya. Teknologi baru yang memungkinkan manajemen data, jadi dengan adanya teknologi ini pasti manajemen data sudah lebih bagus. Analisis dan visualisasi sedang dikembangkan dan dirilis dengan kecepatan yang sangat mengejutkan. Pokoknya ini sebentar aja mungkin dari biro-biro konsultan yang besar-besar ini sudah bisa tahu, wah ini begini, transfer pricing perusahaan ini begini. Jadi perkembangan teknologi yang secepat ini akhirnya membantu memudahkan analisis data kan gitu. Kita mau data apa aja kita bisa saring, kita bisa ini kan. Jadi solusi ini mungkin sebetulnya tergantung dari softwarenya ya yang mereka pakai. Nah, di Dijen Pajak nih, DJP kita sebagai konsultan kita juga harus tahu DJP ini melakukan pengawasan terhadap pajak yang memiliki transaksi afiliasi dengan dan berisiko tinggi, dengan kita tahulah compliance risk management transfer pricing. Pengawasan transfer pricing ini dilakukan secara nasional. Ini sudah tahu, makanya kemarin juga sudah banyak yang dilakukan. Dan dewasa ini risiko transfer pricing semakin menjadi perhatian. Isu tersebut kita tahu bahwa ditindaklanjuti di tahun 2018 dengan SE 15 ya, kalau nggak salah, tentang kebijaksanaan pemeriksaan. Nah itu kan makanya banyak di situ dalam isu tersebut ditetapkan indikator modul ketidakpatuhan wajib pajak. Jadi dalam software itu sudah diketahui mana kira-kira risiko tinggi, ini perusahaan ini risiko tinggi, yang tidak patuh. Salah satu indikator tersebut adalah perencanaan pajak agresif yang mengindikasi risiko transfer pricing. Itu disesuaikan dengan essay itu. Jadi kita tahu bahwa dalam essay itu terdapat 7 transfer pricing yang berpotensi untuk dilakukan pemeriksaan. Selain itu, perbedaan interpretasi atas definisi hubungan istimewa dan tentang kewajaran dalam peraturan Menteri Keuangan juga bisa menimbulkan semakin tadi hubungan istimewa, harga wajar ini selalu menjadi polemik. Jadi kita tahu bahwa maraknya sengketa pajak pada saat ini disebabkan, ya kita tahu wajib pajak dan fiskus yang berselisih paham terkait dengan risiko transfer pricing, sengketa pajak yang berkelanjutan bahkan sampai dengan keberatan dan banding di pengadilan pajak. Kita tahu bahwa proses ini memerlukan waktu yang panjang, sedangkan masing-masing mempertahankan posisinya dengan memberikan bukti-bukti argumen untuk meyakinkan kepada penelaah dan juga kepada hakim. Jadi mungkin itu ya yang saya lihat daripada dengan adanya seminar ini, mungkin dari Biro Konsultan Biro Vandik ini saya lihat mungkin sudah datanya sudah bukan bagus, IT-nya juga sudah sangat bagus. Tetapi mungkin ada sesuatu yang saya tanyakan mengenai kepada Mr. Makbul, mengenai suatu pertanyaan dari saya, Mr. Makbul, bagaimana implikasi dari TP documentation dengan berlakunya two pilar. Jadi itu saja yang bisa saya sampaikan. Cukup sekian. Terima kasih. Wassalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam. Thank you very much, Bapak Sakli, for an enlightening speech today. Well, ladies and gentlemen, now we will start our webinar session by Team Data and Tools to Support Global Tax and Transfer Pricing Analysis. Without any further ado, we would like to welcome our moderator, Ibu Christine Chen, to moderate our main session, which will be brought by our honorable speaker, Mr. Makbul Lalji, Director of Bureau Van Dijk, BVD. To Ibu Christine, time is yours.
Okay, good afternoon, ladies and gentlemen. How are you today? Our distinguished guest of today's webinar and all participants, I wish you all be happy and healthy. It is an honor for me to become the moderator of this event with the very interesting topic, which is the impact of digitalization and technology in tax and transfer pricing from a global and Asia-Pacific perspective. Well, participants, if we are talking about the tax risk and transfer pricing, global data is needed to identify the tax risk and to analyze the transfer pricing issues for tax administration and also for the corporates. Therefore, this afternoon, we will discuss more about this issue. I will invite our speaker of today's webinar, Mr. Makbul Lalji. Hi, Mr. Makbul, how are you? Is Mr. Makbul here?
Yeah. Assalamualaikum warahmatullahi wabarakatuh. Could you hear me?
Yes, I can hear you. How are you?
Fine, thank you.
Okay, ladies and gentlemen, before we listen to his presentation, firstly, I would like to introduce Mr. Makbul. Makbul Lalji is a director of Bureau Van Dijk, a Moody's Analytic company. Makbul is a qualified international tax professional with 45 years experience and a former Her Majesty's Inspector of Taxes. He has led major tax risk projects and held several senior leadership roles at HM Revenue and Custom, UK. He was a board member of HMRC's Large Business Strategic Risk Unit, set up and headed the Large Business High Risk Profiling Unit. And Mr. Makbul also works with tax and customs administrations globally to provide them with Moody's data and solution that supports tax and transfer pricing analysis. Very impressive CV, Mr. Makbul. Mr. Makbul, the screen is yours.
Thank you. I'll share my slides first. Let me.
Yeah, sure.
Could you enable me to participate my sharing the screen?
Budwip, can you please give the co-host to Mr. Makbul?
Sure. Wait a minute, please.
Could you all see my screen?
Yes, I can see your screen. Yeah.
Okay, so it's the data and tools to support global tax and transfer pricing analysis. Yeah, could you see that screen? Yeah. Okay. Assalamualaikum warahmatullahi wabarakatuh. Good afternoon, everyone. Thank you for inviting me to this webinar today. The webinar is on the impact of digitalization and technology in the tax and transfer pricing from a global and APAC perspective. And my presentation is around the data and tools to support global tax and transfer pricing analysis. I will give you more of a tax administration perspective, but I'll also touch from a corporate point of view. And we'll discuss this. So my presentation will include today looking at, change this slide. Okay, my presentation will include looking at the global data to identify tax risk and analysis, analyze transfer pricing issues for tax administrations and corporates. I will also outline what do we mean by global data and digitalization. I will highlight what data tools are available for tax administration corporates. I will also look at the benefits of combining global data and use advanced analytics and show you the modeling outputs that would be essential to address tax avoidance evasion issues and developing a monitoring system for tax administrations when the implementation of Pillar 1 and Pillar 2 goes ahead. So hopefully it will be an enjoyable discussion, and then we can have some questions hopefully. So global data for to identify tax risk and analyze pricing issues for tax administrations and corporates. So a little bit of history in a sense. There has been considerable amount of money being hemorrhaged from tax jurisdictions over the last 10 years. BAPS, the OECD website tells us tax avoidance has over 245 billion pounds a year, or $1 billion a year are lost annually due to tax avoidance by multinational companies. In fact, I think the estimate might be a bit low. Monetary IMF, the International Monetary Fund study in 2017 suggests it's around $400 to $500 billion a year. So 250 billion, I mean, it's an estimate, so we do not know what the actual figure is. It's quite high, very, very high annually. The about 190 billion of global revenue is lost through offshore tax evasion. That's according to economist Zuckman. That's again a bit dated, 2015, but that's another estimate. So it's a big amount. And the money laundering, the amounts are very big, about $2.8 trillion, or 5% of the global GDP annually is lost. And the estimated untaxed wealth of individuals in tax havens is around 10% of the global GDP. So considerable amount of revenue shortages, and there's considerable amount of revenue shortage due to COVID-19 pandemic. And even greater priority is now needed to get the right amount of money from the delinquent activities. So a lot of tax administrations and jurisdictions have lost a lot of money during the last few years, especially through the COVID-19 fraud. In UK has been quite high. So in Europe also, I would think so. So these are all areas where there has been a lot of hemorrhaging for tax for jurisdictions. What are the solutions to address this tax being lost? There's been increasing regulatory compliance burden for corporates and individuals. And the problem is that more and more regulations are being driven out. Corporates have to abide by that, individuals have to abide by that to collect data for tax administrations and jurisdictions. And now it is proposed in UK, for example, an annual international dealings schedule. So to notify the HMRC of material cross-border intergroup transactions aimed at all businesses within transfer pricing. So on top of the country by country reports, they would be asking for more detailed information on international dealings of cross-border intergroup transactions. So there's more and more information is needed nowadays. BAPS 13 country by country reports are there. The advancement or the inclusion or the initiation of the two-pillar solution would again ask a lot of corporates to supply a lot of information. So this could be a highly cost burden situation. It will not be cheap. The data is needed to monitor this new international system, which is being developed after some 100 years of the old system we had. So everything is going to be costly, but the aim is hopefully to reduce the tax gap, improve the economy, and this is what the drivers of BAPS actions were, 1 to 15. And on the back of Action 1 on digitalization, we have now got the two-pillar solution. So what do we mean by global data and digitalization? Global data equates to big data for tax administrations. Give them the visibility across borders and the transactions across borders. So big data is a term that describes large volumes of data, both structured and unstructured, and that gives global visibility. That inundates a business on a day-to-day basis. But it is not the amount of data that is important. It's what the organizations do with the data that matters. Big data can be analyzed for insights that lead to better decisions and strategic business moves. Digitalization is in its basic form, from a tax administration perspective, means embracing new technology to undertake and analyze electronically captured transactions. From an economic perspective, we now also talk about how to tax multinational enterprises across the globe, where they have a physical or non-physical virtual presence in jurisdiction. This is your OECD's the two-pillar solution. So what data and tools are available for the tax administration and corporates? So we have got a lot of data for tax administrations, at least. So on the tax administration side, they got a lot of e-file and e-lodge data coming in from tax returns, claims from individuals and partnerships, corporate tax and VAT documents, corporate information, corporate business accounts in IXBRL, XBRL, tax computation in the format in that. So they get lots of this information coming in into their gateway, electronic data. They also are able to collect Internet of Things, data from web robotics, scraping information, social media information, archive data. And on the external side, they have this electronic data from institutions like Common Reporting Standards, wider governmental bodies, like data information from conventions for international trade in endangered species and wild fauna and flora. They got tax treaty data, BAPS country by country data, sharing reports across jurisdictions and competent tax authorities, exchanges. On a commercial side, there is a lot of data there. Again, you've got historical financials going back to 2010, financial strength indicators. You've got your commodity pricing data, lending margin data for transfer pricing purposes, scanned documents for scanned documents with financial notes, shareholders information, subsidiaries information, beneficial ownership across the globe. For example, in the Moody's world, there are over 1.2 billion ownership links in the data, historical data going back around over 10 years, 15 years, around that much. You got directors and contacts information, so much information on individuals. You got your daily mergers and acquisition information, cross-border information, and intellectual property information. There's over 120 patents, global 120 million patents information linked to some 120 corporate information in the Orbs database. You've got a PAPS and sections data. You got your daily news and industry data, and you got adverse media data. You got your regulatory information data and so on. So we got hosts of data around for the tax administrations now to play with. And from a transfer pricing data and tools perspective, you again got in a commercial world, historical financials data, multiple financial formats, commodities data, scanned documents, transfer pricing catalyst. This is the workflow tools in Moody's world. And now also you have the risk calc tool, which is looking at the expected default frequencies to make some adjustments on geographical basis for transfer pricing value marking. And you got patents information data, innovation strengths indicators, royalty rates, and shareholders, beneficial owners, directors, and so forth. And all this information is available through access on the website and or data integration, data feed options. So this kind of data is available not just to governments, also but corporates, large corporates. So this commercial data is quite important in a sense that in this world of digitalization and needing to have data to monitor what BAPs, what pillar 1 and pillar 2 might throw at you, to look at from a corporate point of view, your competitors, how they're structuring their businesses, what they're doing in terms of a number of distributors and so forth in jurisdictions and so forth. So it's a lot of information that is there, which can give you insight in how to look at and analyze data. So benefits of combining global data and use of advanced analytics. So this thing, advanced analytics, what do we mean by that from a tax administration perspective? We mean having the capabilities of a framework, servers in the data in the tax administrations area, infrastructure, IT infrastructure, having the capabilities in terms of resources, data scientists, and so forth. That kind of capabilities over 10 years ago was very little. Since 2015, there has been a growing trend for large investments in the digitalization. So lots of tax administrations are investing billions of dollars in their infrastructure. Even the small tax administrations, I've seen tenders coming in and so forth, are investing quite reasonable amounts to improve their IT infrastructure. Data architectures, creating data hubs using new toolkits, including artificial intelligence. As earlier said, China, US are leading the way in this area. So there's a lot of work being done around artificial intelligence, recruiting new bands of data analysts and data scientists globally. A lot of the tax administrations are now recruiting those data scientists with double PhD degrees, very clever people who can analyze, who can do data mining, deep mining, and so forth. And then blending the data with third-party data within the administration internal data system. There's a growing appetite to procure commercial data for effective tax risk assessment. So this is a map I looked at 10 years ago. When I looked at this map, I can see there were about less than 8 odd jurisdictions in the world which had advanced data analytics capabilities. You had your Australia, you had Canada, you had France, you had Japan, Netherlands, Singapore, UK, and United States. And 10 years later, around 2020, there are some 40 odd tax administrations now have the capability of advanced analytics and big data. So you're looking from in South America, Argentina to United States, and then you got a lot of African countries are also having that. Asia is quite getting very, very relevant with very good with data analytics, Europe and so forth. So you got some over 40 jurisdictions now. Even the small ones in Africa, small jurisdictions in Africa, Lesotho and places like that have those capabilities. So there is a lot of capabilities of advanced data analytics, and the way they are using this data is investing in big architecture, data architecture, enterprise-wide data architecture. So, for example, this is just an example of a data architecture schematic, and it shows the kind of investments the tax administration is doing. They're in putting their internal data into the big data lake system. They would then also have their commercial data into the system, and they would have their external information, all this electronic data they're getting, country by country report, Panama Papers data, and so forth. And what they will do, they will put it through the system to a data lake with your midway software infrastructure in there. They will do upstream risk management. This will enable the enable traditional business intelligence kind of analysis, and then it will also allow your AI tools to do some basic analysis and allow your junior executives in the tax administrations to look at upstream risk management as the data comes in. Downstream, where you would have more complex information to analyze, they would use advanced analytics, APIs, neural networks, text and data mining, look at outputs for tax and policy professional data scientists and senior leadership. So this becomes a very industrious way of looking data, monitoring data, and so forth. And in this world of Pillar 1 and Pillar 2, how do you apply those formula approaches? How do you carve up the information? How do you look at the market destination and so forth? So it becomes quite relevant for all this data to have. So, for example, if you look at a big multinational, large multinational structure, this one, for example, is about over 500 companies in a corporate group. And it looks very scattered like that, but you can dissect and you can look at various parts of the multinational and see how it looks. For example, you can dissect this multinational structure and you can find out as currently probably a tax planning scheme, tax avoidance scheme, where you could see a manufacturing company, a large Southeast Asia manufacturing company, which has got a considerable amount of income, is then structured in a way with Southeast Asia holding companies in a low tax jurisdiction. And then you got your Dutch companies, your Netherlands BV partnership type companies in the middle. You got your IP holding companies in Switzerland, again, a Dutch holding structure in there, and the ultimate owner, the US multinational. So for this foreign multinational, the US global ultimate owner, they use Dutch partnership structures. They use intellectual property holding companies in low tax jurisdictions. And then they make use of the interconnecting treaties, double taxation treaties, and by doing that, they would make sure that any withholding taxes are not subject to any withholding taxes. So basically, they are passing on income through interest payments, royalty fees, dividends, and so forth, without much ado in terms of suffering withholding tax, let alone corporate tax. And what kind of challenges would you have? You may want to check whether these structures are shell companies, permanent establishments or not, so whether you can run your substance tests and so forth. So these are kind of challenges you may have. So would the Pillar 1, Pillar 2, would Pillar 2 stop this kind of structuring? Pillar 2 looks at multinationals at over 750 million euros operating revenue and so forth, and it's looking at maybe more than 5 or 6 subsidiaries in a low tax jurisdiction, zero tax jurisdiction. But this kind of structure is very clever, may escape the Pillar 2 catchment area. So would they still be there? We need to test it, but you need to have data to enable you to see those kind of structures. So it's interesting what Pillar 1 and Pillar 2 can do, but would it eliminate this kind of situation? Again, a local example, Southeast Asian example, you got some 6 individual Indonesian beneficial owners owning and controlling a group parent in Singapore. Singapore structures got financing holding, investment holding, services, financial insurance, and holding, other holding companies. But then it also has manufacturing in Indonesia. It has got wholesale trade in Vietnam and Thailand. So would this, the total global operating revenue is 1.2 billion of this parent concern, but under the Pillar 1, destination market taxation is under, the multinational is under the 20 billion euro turnover starting point. So it probably is not, it would not be part of the Pillar 1. So for amount B, the kind of distributors, and would they be able to apply the formula approach to this on the distributors, low limited risk distributors and so forth? Doubt it very much. So this kind of situation, probably if you have this kind of model, will still exist. So you need data to understand from an administration point of view that you need to also understand where such structures are. You still need transfer pricing benchmarking. And if that's the case, then you would need the consultants also to be able to produce those benchmarks to support those companies, suppose the companies' benchmarks. So still, pillar one, the formula approach for amount B possibly is not going to operate in these kind of circumstances. So let's have a look at another structure. This is another structure where you need to, from a tax administration point of view, you need to look at how the money in a secretive structure could, for example, a kind of money laundering situation where money can be siphoned or sent from a large investment fund. Unknown sanctioned individual may have a large amount of money coming in, putting into this fund, and then setting up the companies in a layering fashion, layer one, layer two, and so forth, by channeling the money through low tax, zero tax jurisdictions like Virgin Islands, having investment holding companies, setting up trusts around in Guernsey, in the Channel Islands, in UK, zero taxation there, Bahama company, investment holding, and so forth. And then having a number of companies with nominees, special purpose vehicles, and so forth, nominees just to disguise who the ultimate owner is, and so forth. So very clever structuring can go through low tax jurisdictions. And this way, the fund, the ill-gotten funds, maybe money laundered funds, can pass through these channels, siphon through the channels through the system here, and then become clean and go into legitimate businesses and trading businesses in, say, in Hong Kong, in Japan, in Southeast Asia, in Middle East, in Africa, in Canada, and UK. So by doing all this, how could you spot this kind of structure? Again, big data will allow you to do that. This modeling, which we can do currently, I've used this modeling using commercial data. I've not been able, because I haven't got access to the internal data from the tax administration, but on commercial data alone, you can do this. And imagine if you mix, if you blend this data with what the tax authorities have, tax administration, the false positives will be less, and you can get very good information on all this kind of structures. So now coming back to pillar one and modeling, this is a high level view of pillar one. So you got your minimum multinational operating of over 20 billion euros operating revenue in a market jurisdiction around your Southeast Asia, Asian companies, ASEAN companies, Malaysia, Vietnam, Singapore, Thailand, and so forth. And you got your possible low limited risk distributors and so forth. So here, the amount B in the market jurisdiction is possible to have. You can be able to look at those and work out a formula or approach what the amount B might be. And if that's the case, then your low risk transfer pricing, benchmarking, kind of the TN, MM aspects of work might not be needed because you have a little formulaic approach to it, and that would be great. So what the BAPS action, the pillar one, pillar two action suggests? Pillar one says that by implementing pillar one globally, tax jurisdictions will be able to recover $150 billion a year, $125 billion a year. And the implementation of pillar two would allow to relocate profits of around 1.5 billion a year. But is that true from a Asian perspective? I'm not sure. I think we need to wait and see how these approaches materialize, how they impact. And the road is not easy yet. There's a lot of complexities involved in your way of working out pillar B, amount B, and your pillar 1, the amount A, and so forth. So it's nothing is easy nowadays, but you need the data, need to be able to understand, you need to be able to monitor how jurisdictions may be able to see these approaches. Are they beneficial to them? What else would they want to do? And from a corporate point of view, they need to have a bit of an impact assessment and say what this impact will have on their business. It will make their lives a bit difficult in the sense that from a point of view of collecting data for tax administrations, the burden will become increasingly high, the cost will become high, and from a loss of work maybe at the lower end of transfer pricing benchmarking, there might be, but there's no impact assessment done in that area yet. I think that's need to be discovered over the next few years. See how this is being implemented, how long it will take, how long would you be able to get the local jurisdictions in place, and so forth. So there's a lot to be done, and we need to await and see what the results would be. But the main thing is we need data. You need to have the data to analyze for tax administration purposes. They need to analyze how this data is there for them to look at. From a corporate point of view, they need to have data. They need to gather data for tax administrations, but also they need the data themselves to understand how the structures are across the globe, what the competitors are doing, and so forth. So they need to monitor. So we need data from all angles, and we need infrastructure. We need your data scientist people working in this area. We need AI. So it's a lot to be done over the next few years. So we are entering the digitalization world. But in the next few years, I think we need to do a lot of work in improving our infrastructure and getting more expertise around this work. So what I would say my key takeaways in this area would be, we have global data employed with advanced analytics gives you the visibility of tax issues across tax jurisdictions. But this comes with a high cost, high burden cost. High cost from a corporate point of view, high cost from investments in architecture, IT investment, and so forth, resources, and the global data, the key component, the two-pillar solution. To work, we need data. And for this to work, we need to look at it and try it out. Does it work? If it doesn't work, would you have local taxes being imposed other than what's been recommended in pillar 1, pillar 2? We need to watch. And global data is, as you said, is very, as I said, is very essential for tax administrations to reduce the increasing tax gap, which is increasing now with the pandemic. It's gone considerably big. It's hard work over the next few years. Lot of expertise is needed. A lot of investments is needed, and finding out, trialing out, and the new system and the proposed system and the pillar 1, pillar 2 will take a while to embed, and to get the uniformity across the tax jurisdictions would be something to watch. I think I'll leave it at that and see if there are any more questions to ask. Thank you.
Thank you very much, Mr. Makbul, for the very interesting presentation regarding data and tools to support global tax and transfer pricing analysis. Ladies and gentlemen, there are several issues that have been covered by his presentation. He has explained to us regarding what is global data and what is digitalization, and then what data and tools are available for tax administration and corporates. And also, what is the benefits of combining global data and the use of advanced analytics? And I agree with you, Mr. Makbul, that global data is the key component of the two-pillar solution to work. I think without global data, the government is very difficult to calculate how much is the the possible tax revenue that they can get, for example, from the implementation of two pillars, Pillar 1 and Pillar 2. And also, it is essential for the tax administration to reduce the increasing tax gap. Thank you once again for very nice presentation, Mr. Makbul. And then there are several questions for you. The first one is from Bapak Sakli. He asked regarding what is the implication of the implementation of two pillars to the transfer pricing documentation? Can you please answer that question for Bapak Sakli?
Yeah, from a transfer pricing documentation, I think the implication is that more and more documentation will be needed. Detailed information will be needed for, as in UK, they're trying to get the cross-border transaction information on all businesses or multinationals in the transfer pricing area. So they're looking for detailed cross-border transaction information. So that's the burdens are going to be there. The country-by-country reporting will become more complex, more detailed. There's more and more regulatory information they want. So the pillar approach will have considerable implication from data collection, getting the data in the right format, sending it in the right format, then being able to analyze it. It's not going to be easy, and the cost is going to increase, I think, from a corporate point of view or taxpayer point of view.
Okay, so it will increase the compliance cost then. Yeah, I can imagine what happened next. Well, hopefully, I don't know, maybe you are following the development in other countries, but I think in Indonesia, we just also have a discussion with the government previously that we are still in the wait and see, and then hopefully there will be a good policy regarding the Pillar 1 and Pillar 2 later on. And then maybe the other question is, would Pillar 2 eliminate profit shifting to tax havens?
Okay, I mean that's the whole purpose of Pillar 2 is to do that, and the impact assessment suggests that it will recover at least 150 billion dollars a year towards and reallocate to tax jurisdictions. Is it going to happen? I'm not 100% sure, because the starting point for Pillar 2 is 750 million euros for businesses coming into it. What happens to those other businesses which are below that? I look at data every day, and I can spot a lot of businesses owned by individuals which have multinational structures, kind of corporates, large corporates with around 600 million euros operating revenue. So they have several of these, and they have exposure to your low tax jurisdiction, over more than 5 or 6 companies, subsidiaries in those very low tax jurisdictions. So are they going to, that's going to escape the minimum global rate of 15% effective tax rate. So that those businesses are going to be okay, will escape those kind of areas. Then you got the tax jurisdictions themselves will increase their corporate tax rate. It's like Ireland is saying that it will increase from 12.5% to 15%. Bermuda or Bahamas, I think they might increase it around to the same level, but they are going to do this. Are they going to do it for all companies headquarters there? I mean, or are they going to keep the limitation of 750 million euros or $850 million a year turnover? So what happens to those businesses below that amount? And what happens to the jurisdictions like the Channel Islands, your Jersey, Guernsey, Isle of Man, your Cayman Islands, and so forth? What's going to happen there? I don't think they're going to raise their corporate tax rates. They will not. I don't think they'll introduce corporate taxation. to 15%. So those will be there, and there's a way around to this. 750 million euro or $850,000 would not catch everything. Will be a lot of. So what will happen is probably the profit shifting will move down a notch from your very top to down a notch, and it will be there. I think it will create some lovely structures for us to look at over the next few years. I don't think it will come, but I think over the years, once the system embeds and we get more familiar with it, local legislation might do things. But again, then those tax jurisdictions with zero taxation, it's their economy. I mean, are they going to? I don't think they're going to play this kind of game unless there are some incentives for them, from an investment point of view. So it's wait and see. I think it's not going to eliminate your profit shifting. It will minimize it, but it will move to a different level, in my view. I mean, we have to wait and see.
Okay, thank you. Very interesting. So yeah, it will not be eliminated, but maybe it will be minimized, yeah, Mr. Makbul, regarding the profit shifting to tax havens. And then the last questions from corporate angle, perhaps the panel may like to consider what is the impact Pillar 1 Amount B outcome may have on TP benchmarking. Would this make life easier for corporates and consultants? Because here there are a lot of consultants, maybe they provide the TP documentation service, and well, what is the impact on that? Thank you.
Yeah, I think the panel would be more able to answer that. But from my perspective, what I can see, I think the low end of transfer pricing benchmarking work with the limited distribution risk and distributors, and with limited risk distributors, that kind of benchmarking possibly might not be there for them to undertake, because if this formulaic approach works, and say, for example, in a sector, in a jurisdiction, they say those low risk distributors, the EBIT profit might be, say, 5%, and that's fine. And within that range, you should not have any challenges on arm's length principle and so forth. You accept that formulaic approach, that may work, but that depends on the kind of business structure it is. If it is complex distributor, then you need to apply all those benchmarking standards. So possibilities are, might be a minimum effect on corporates, but things are not as simple as they see. Still, I think the work of consultants and corporates in having benchmarks will still remain, even in the less complicated benchmarking areas. But the cost, of course, will be increased for corporates and taxpayers to provide the data to administrations and so forth. So I think there needs to be a good impact assessment to be done from a commercial point of view to see what this will have, what impact this will have. But I think it's a bit early to say that. Transfer pricing business is not going to die for corporates. As long as there is tax, tax never dies. As long as there is tax.
So don't worry about that, yeah.
Don't worry, it will be there.
Okay, then I think the times is up, or maybe is there any questions? Oh, okay. Pa Albert Naibaho asked, how about if the transfer price of our clients not arm's length? What we should do, sir? What will you advise to client? Not between minimum Q1, Q3, and maximum.
Okay, but then if it's not within the arm's length, then obviously they need to ensure that they have good benchmarks to support that, and because the tax authorities are going to challenge that, because if they're looking at the amount B, the formula approach to it, and if it's outside that range, then they're going to observe that, they're going to challenge it. So I think the corporates will need to be ready to have those benchmarks ready to support their transfer pricing reports.
Okay, Albert. Hopefully it can answer your questions. Yeah. Okay. I think the time is up. Well, thank you very much, Mr. Makbul, to share with us this interesting topic and also it's very happening because this topic will last for a couple of years ahead. Bapak Ibu, excuse me to speak in bahasa. So I just want to recap ya, Bapak Ibu. Jadi kita tadi sudah mendengarkan Mr. Makbul sesuai dengan tema hari ini, impact dari digitalisasi dan juga terkait dengan teknologi ya terkait dengan tax dan transfer pricing. Jadi memang kita sudah melihat tadi bahwa kedepannya itu global data itu sangat dibutuhkan baik oleh corporate maupun juga oleh pemerintah. Apalagi dengan nanti akan diterapkannya pilar 1 dan pilar 2 ya, rencananya katanya tahun depan gitu ya. Nah, pemerintah juga sangat membutuhkan global data ini. Dan juga tadi terkait dengan transfer pricing, buat Bapak Ibu yang mungkin pekerjaannya related kepada transfer pricing analysis juga akan terkena dampaknya ataupun juga sangat membutuhkan data ini ke depannya lebih banyak lagi. Dan tadi Makbul said that don't worry, transfer pricing still there as long as tax is there ya. Jadi itu adalah poin-poin utama. Jadi intinya adalah memang kita sangat membutuhkan sekali global data ini dengan berkembangnya digitalization dan teknologi. Baik Bapak Ibu, thank you very much once again, Mr. Makbul, thank you very much for your presentation today, and also thank you very much, ladies and gentlemen, for your participation. And hopefully, what we have discussed can increase our knowledge, and also it will be beneficial for your work as a consultant. Okay, thank you once again, and I will pass on again to Iris as the MC. Thank you. Good evening.
Thank you, Bu Christine Chen, and thank you very much, especially for Mr. Makbul for the very inspiring seminar and for giving us such informative presentation. Izin Bapak Ibu, teman-teman boleh nyalain videonya, kita mau foto bersama. Boleh dari timnya Bu Dwi ya, atau saya yang screenshot. Oke. Ya, silakan on videonya untuk kita foto bersama. Oke, kita mulai dulu dari slide yang pertama ya, teman-teman. 1, 2, 3. Oke, next. Satu, 2, 3. Last one. Okay, we're done. Thank you. Okay.
Thank you, everyone.
Thank you, everyone. So right now, before ending this event, we kindly invite Ibu Dwi Ratna, Head of P3KPI Education, Literacy and Competence Field, to deliver her closing speech. Bu Dwi, time is yours, please.
Selamat sore, terima kasih Bapak Ibu atas kehadirannya di webinar ini. Also, thank you Mr. Makbul for being at our event. As we know that the technology is a life-changing that we cannot avoid, but how to use it at the right way will also bring us to the next level as consultants, as leaders, and also as educators. We're really looking forward for the invention from BVD that will make our life easier and with quality. Of course, at the end of this webinar, I would like to say my gratitude to all supporting associations and all members. You really make us better every day. So once more, thank you for being at our event, Makbul, and thank you for supporting P3KPI, and we really appreciate for our attendance today, and Mrs. Susi Suryani, also Mr. Sakli Anggoro, Ibu Christine Chen, and Miss Irene. So thank you very much. And let's meet at our next event and also the best event from P3KPI. Good day.
Okay, thank you, Budi Ratna. So, ladies and gentlemen, now we come to the end of this event. On behalf of the host and committee, we would like to extend once again our deepest appreciation to you all for your support in participation. Hopefully, this event will be beneficial for all the participants as P3KPI's motto is to grow together with knowledge sharing towards a reliable and insightful tax consultants. We present all the committee on today's event. I beg your pardon if any lack of presentation today. Once again, thank you. Stay safe and healthy. Good evening and see you next time in the next P3KPI event. Bye. Thank you all.
Bye. Thank you.
Mr.
Thank you, Mr.
Makbul.
Makbul.
Thank you, Miss Christine. Thank you, Miss Budi.
Thank you, Irene. Thank you, Bu Ratna, Bu Susi, everyone. Thank you.
Thank you, everybody.
P3KPI mudah-mudahan makin sukses dan berjaya.
Selamat ulang tahun P3KPI yang ke-1. Walaupun umur dan usianya muda, tetapi dalam 1 tahun ini saya melihat luar biasa sekali.
Selamat ulang tahun P3KPI. Semoga semakin hari kita semakin maju, memajukan konsultan muda, menjadi konsultan yang handal dan terpercaya. Bersinergi, kita bisa.
Selamat ulang tahun P3KPI. Bersinergi bersama kita pasti bisa. Yes!
Perkumpulan Praktisi dan Profesi Konsultan Pajak Indonesia atau P3KPI adalah wadah bagi seluruh warga negara Indonesia yang bergerak di bidang jasa perpajakan dari berbagai disiplin ilmu. Sesuai amanat PMK 111/2014 bahwa konsultan pajak Indonesia harus bisa berperan untuk membina dan mengedukasi dan menjadi jembatan antara kepentingan wajib pajak dan kantor pajak atau Direktorat Jenderal Pajak. Moto daripada P3KPI adalah bersinergi bersama-sama, berbagi pengetahuan, membuka wawasan seluas-luasnya bagi konsultan pajak dan merupakan solusi bagi konsultan pajak yang membantu mereka untuk mencari solusi dalam masalah. P3KPI merupakan perkumpulan yang berkomitmen tinggi di dalam memajukan konsultan pajak Indonesia, ikut berperan di dalam formulasi dan regulasi kebijakan pemerintah melalui basis riset dan kajian, juga membina dan membimbing anggotanya supaya mampu menjadi jembatan di antara dua kepentingan wajib pajak dan kepentingan otoritas, dalam hal ini Direktorat Jenderal Pajak.
mudah-mudahan dengan forum seperti ini terus kita perkaya, kita perbanyak, sehingga pajak yang menjadi tulang punggung penerimaan negara menjadi urat nadi pembangunan betul-betul semakin.
Nanti di dalamnya itu akan diatur mengenai P2PK sebagai unit pembina dari konsultan pajak ini.
Yaitu tentang tax amnesty. Nah,
sepinter-pinternya Anda orang tidak tertarik, tapi sebaliknya
jadi nanti mungkin akan keluar ya campaign.
nggak ada kerjaan, dia lebih santai. Tapi kalau setiap kali slide ke kiri lewatin dia.
Untuk penghematan waktu, kemudian ramah lingkungan karena tidak menggunakan kertas.
Ini dijelaskan adanya beberapa fase untuk proses integrasi itu sampai dengan
Itu tidak ada pergolakan di keluarga.
Kita pahami semua. Mungkin coba saya ingin merefresh sebentar ya, Nah, memang
adalah berbicara untuk pajak, yang kedua berbicara subjek pajak, yang ketiga
dalam rangka meningkatkan tadi kemudahan berusaha supaya investasinya meningkat.
PPN bisa dikenakan oleh negara di mana konsumen berada.
peraturan baru yang ada ya. Jangan sampai kita malah kitanya nggak tahu ya.
Ya, sekarang dengan tulang dua nggak bisa lagi